10 credit score hacks for 2025 that you can use to boost your score fast in Canada. Imagine this. You are at the car dealership, you've picked out your dream car, a shiny new SUV with all the bells and whistles. You walk confidently to the financial desk, ready to sign the papers, and then boom, the financial manager hits you with a 12% interest rate because your credit score is lower than the temperature in Winnipeg in January. My buddy Jake went through this exact scenario. He thought credit scores were just numbers that banks use to judge you, but turns out they actually determine how much money you'll be giving them in interest. And let's just say that thanks to his credit score, he ended up financing a used Toyota instead of that brand new SUV. If you don't want to end up like Jake, stay with me because today I'm giving you 10 simple and effective ways to improve your credit score in 2025, especially if you live in Canada. From checking your credit score for free to rent payments actually counting towards your credit score, we are covering it all today. So before we go any further, you might ask, what is a good credit score in Canada? Before we dive deep into the hacks, let's break down what makes a good credit score in Canada. In Canada, your credit score is a three-digit number between 300 and 900. And here is what those numbers mean. If you have something between 300 to 559, oof, lenders see you as a risk. Getting approved for credit is very tough. If you are somebody who is between 560 to 659, fair, but lenders might still charge you higher interest because they still see you as somebody with a possible risk. If you are between 660 to 724, that's a good one. You will get approved for most loans with decent rates. But if you are between 725 to 759, that's a very good one. You will be getting even better rates. And if you are somebody whose score is above 760, that's an excellent one. Banks will love you and you will get the best interest rate and can basically finance a spaceship even if you want it. Now that we've got that out of the way, let's get into the 10 credit score hacks that you can use now to at least get yourself in a better situation. My first tip will be check your credit score report for free and fix any errors. Checking your credit score is like checking your bank account after a weekend out. Scary, but it's still necessary. Your credit report contains all your credit history, and errors on it can tank your score without you even realizing it. In Canada, you can check your credit report for free through Equifax Canada and even TransUnion Canada. And there are websites like Credit Karma or Borrowwell, which makes it easy to check your credit score. Personally, I use Borrowwell to make sure that I'm always on top of my credit score. Mistakes like incorrect late payments, old debts that should have been removed, or accounts you've never opened can bring down your score. And I personally know this because it happened to me. If you find any errors, you can dispute them directly with the credit bureau, and they are required to investigate and correct any mistakes that you report to them. So checking your report regularly ensures that you are not losing points for no reason and allows you to stay on top of your financial health. Tip number 2, and you think this will come easy to most people, is pay your bills on time with no exceptions. Payment history makes up about 35% of your credit score. That means even one late payment can send your credit score into a free fall faster than the price of a used Tesla. Paying your bills late doesn't just result in late fees, it also negatively impacts your credit report. Credit card companies, loan providers, and even some utility companies report missed payments to the credit bureaus, and these negative marks can stay on your record for 6 years. To avoid this, set up auto payments or at least calendar reminders for due dates for most of the bills that you have. If you ever miss payment, call your creditor immediately. Some companies offer grace periods and may not report the late payment if you act fast. Making consistent and on-time payment is one of the most powerful ways to maintain and improve your credit score. My tip number 3 will be keep your credit utilization below 30%. Your credit utilization is how much of your available credit you are using. If you have a $5,000 credit limit and you owe $4,500, that means a 90% utilization rate, which tells banks that you are living on the edge. Credit utilization accounts for about 30% of your credit score, making it a crucial factor. A high utilization rate suggests to lenders that you rely too much on credit, which can make you seem like a risky borrower. The best practice is to keep your usage below about 30% of your total available credit. For example, if you have a $10,000 limit, try to keep your balance under $3,000. If you are struggling to keep your utilization low, consider requesting a credit limit increase. This will lower your utilization percentage without you having to spend less. Just make sure you don't use the extra limit as an excuse to rack up more debt just because they've given it to you. My tip number 4 will be use credit building tools like Koho or Borrower. If your credit score is looking rough, don't panic. In Canada, there are credit building tools that can help you. If you don't have a strong credit history or need to improve your credit score quickly, credit building tools can be a lifesaver for you. Koho Credit Builder is a great option because it functions like a savings account. You pay yourself each month and Koho reports these payments to credit bureaus as if they were a loan. Borrower Credit Builder loan works similarly, allowing you to make smaller, predictable payments that are reported to Equifax. These tools are especially helpful if you don't qualify for a traditional credit card but still want to build. Over time, they help you establish a strong credit history without taking on unnecessary debt. Tip number 5, become an authorized user on someone's card. If you have a responsible friend or family member with a great credit history, you can ask them to add you as an authorized user on their credit card, but make sure at least you don't go and mess their card for them. As an authorized user, the primary card holder's good payment history gets added to your credit report, giving your score a boost. This is an easy way to improve your credits without taking on any debt yourself. However, this only works if the primary card holder is financially responsible. If they miss payment or max out their card, their negative behavior will reflect on your report too. Before asking someone, make sure they have a long credit history, consistently pay on time, and have a low utilization rate. If done right, this trick can quickly improve your credit score with little effort. My tip number 6, don't apply for too much credit at once. Every time you apply for a new credit card or loan, a hard inquiry is recorded. Too many hard inquiries in a short time make you look desperate, like someone who just got denied at every club in King Street in Toronto. When lenders see multiple hard inquiries on your report within a short period, they may assume you are in financial trouble. This can make it harder to get approved for loans or even credit cards, and it can cause your score to drop temporarily. A single hard pull can lower your score by about 5 to 10 points, and multiple applications can have a compounding effect on your credit score. To avoid this, space out your credit applications by at least 6 months, unless you are shopping for mortgage or auto loan, where multiple inquiries in a short period are treated as one. If you are just curious about what you qualify for, look for lenders that offer pre-approvals with soft credit checks. My tip number 7 will be diversify your credit mix. Having different type of credit is like having a well-balanced diet. If all you eat is pizza, eventually your body will complain. The same goes for your credit score. If all you have is credit cards, lenders might not trust you as much as someone who has a mix of credit types. Your credit mix refers to the different type of credit accounts that you might have, and it makes up about 10% of your credit score. In Canada, credit falls into 3 different categories. Revolving credits, these are like credit cards and line of credits. Installment loans, and these are like car loans and student loans, and they have mortgage. Having a mix of these shows lenders you can responsibly manage different types of debts. That does not mean you should go out there and take on a new debt just for the sake of it. But if you only have a credit card, adding a small personal loan or a secure credit card could strengthen your credit profile. Over time, a diverse credit mix can improve your score, making you look like a reliable borrower. Tip number 8, rent payment can boost your credit score. For most people, rent is their biggest monthly expense. But here's the kicker. Unless you do something about it, those thousands of dollars you are paying your landlord won't help your credit score one bit. Unlike mortgage payments, rent payments don't automatically get reported to credit bureaus in Canada. However, thanks to services like Borrow Well Rent Advantage and Landlord Credit Bureau, that's LCB, you can actually report your rent payments to Equifax and have them count towards your credit history. This is a game changer for renters who want to build credit without taking on debt. If your landlord is registered with LCB, your rent payments can be recorded as part of your credit profile, showing future lenders that you have a strong history of making consistent payments. If your landlord isn't on board, some rent reporting services allow you to self-report your rent. So it's worth looking into if you are a renter trying to improve your score. My 9th tip will be keep old credit accounts open. If you are thinking about closing an old credit card because you don't use it anymore, hold up. That old account might be the secret weapon keeping your credit score afloat. One of the biggest factors in your credit score is credit history length, which makes up about 15% of your score. The longer you have the credit account open, the better it looks to lenders. If you close an old credit card, it shortens your credit history and can lower your overall credit limit, which increases your utilization, both of which can hurt your credit score. Instead of closing unused credit cards, consider keeping them open and using them for small occasional purchases to keep them active. Some cards have annual fees, so if you really need to close one, prioritize closing newer accounts before even older ones. Maintaining a long and stable credit history tells lenders that you have been managing your credit responsibly for years, which can help improve your score. Tip number 10, negotiate with creditors if you are struggling. Life happens. Unexpected expenses, job loss, or even just a raw financial patch can make paying your bills on time very difficult. But before you panic and miss payment, talk to your creditors. Many lenders in Canada offer hardship programs that can help you if you are struggling to make payments. These might include lower interest rates, extended payment terms, or temporary payment deferrals. The key is to communicate with them before you miss a payment, because once a late payment is reported, it stays on your credit report for 6 years. If you are in a tough spot, call your lender and explain your situation. They'd rather work with you than have you default on your debt. Additionally, some lenders are willing to remove late payment reports if you have been a good customer in the past. A simple phone call can sometimes save your credit score from unnecessary damage. Alright, so let's do a quick recap of what we covered today, just in case you miss anything. 1, check your credit report for free and dispute any errors. Secondly, pay your bills on time, no excuses. Keep your credit utilization low, possibly under 30%. Use credit building tools like Koho or Borrow Well. Get added as an authorized user on a responsible person's card. Do not apply for too much credit at once. Diversify your credit mix to show responsible credit use. Report your rent payments to boost your credit. Keep old credit accounts open to maintain credit history, and negotiate with your creditors if you are struggling. Don't just ignore the problem. Now that you've got these hacks, your credit score is going to be looking healthier than Drake's bank account. Before we go, let me know in the comment section which of these tips surprised you the most. Also, if you want to take your finances to the next level, check out my other videos on budgeting or debt management, because good credit is only one part of your financial success puzzle. That's it for today. Don't forget to like, subscribe, and hit the notification bell so that you don't miss any of my future money tips. See you in the next video, and I'll leave some links to some of the tools that I mentioned in the video in the description area, so do want to check them out. Until then, cheers.